Hey folks, Dan Frio here, the rate update. Today is July 19th, 2021. Don't look at the stock market. Don't look at your 401k. The markets are crashing. The good news behind all this, it's nothing but good news for mortgage rates, so don't go away. Well, if you just logged into your security account or your 401k, you're going to be like, what in the world is going on? Well, stock market's crashing. Okay, so what you're going to start hearing today, here in the rate update, we talk about mortgage rates and real estate. So it's a great day to explain a lot of this stuff to you in how the markets work. All right, so I'm going to try to get through this as quick as I can and not make it as confusing as it can be. In the perfect world, there's three investments you can make: real estate, stocks, and bonds. Okay, so right now today we know how the real estate market's going, so we're going to kind of put that on a side right now. There's stocks and bonds is what you're looking at in investments. All right, what you're going to start hearing today in the news, you'll probably hear it 100 times if you watch a lot of the financial news, is flee to safety. So here's what's happening in the market right now. The market's crashing, the stock market's crashing, okay? So there's stocks and there's bonds. What happens when the stock market starts to crash? You're gonna hear that word, flee to safety. What does it mean? Well, it's basically people are selling their stocks. They don't wanna hold it in cash because there's zero yield, all right? You get no return on your money. Even bank accounts, a savings account, you get 0.0001. It's basically zero, okay? Inflation's 2 to 5%. So you need to get at least 2 to 5% to just make your dollar equal to what it is today, where it will be next year, okay? So what do? Well, the stock market's plumbing. You want to get out of stocks, you buy bonds. There's two variations of bonds. There's multiple variations of bonds, but let's just make it simple. Government bonds, and in our world, mortgage-backed securities. It's the bond that trades on Wall Street. You might have in your portfolio. You might have bought it today, but it's a bond that trades on Wall Street that is the biggest component of your mortgage rate, okay? So what's happening today is people are dumping their stocks because it's a bloodbath out there, and they're buying bonds. When they look at the treasuries, a 10-year treasury right now is getting a 1.1% return. So you're gonna get 1.1% return on your money for 10 years. You're still not equal to inflation. So then you start, where can I get more yield? Well, the yield on mortgage-backed securities now surpassed today the 10-year treasury yield. So people are buying mortgage-backed securities in droves. What do we know? As you buy more of something, especially mortgage-backed securities, you buy more and more and more, it brings the price up. What happens when the price of a bond goes up? The yield, or in our case, what we follow is mortgage-backed securities, your mortgage rate goes down. So let's see what's happening in the markets today, and I'll explain it a little more in detail. So the first headlines we see are people are rushing to safety, and they're driving down U.S. Treasury yields to a 5-month low. Well, that's good for mortgage-backed securities. And you're going to say a lot of times, Dan, you say mortgage-backed or the 10-year Treasury has no effect on the mortgage rates. They don't. But let's go back to that investment scenario that we talked about. Now you have two investments in the bond world: mortgage-backed securities, U.S. Treasuries. What's the yield on each one of them? Well, the yield now on the mortgage-backed securities is higher than U.S. Treasuries. So now less people are buying U.S. Treasuries, more and more and more people are buying mortgage-backed securities. So you have people fleeing from safety in stocks, looking to bonds as an investment, and they're like, well, we don't want Treasuries because the yield's too low. We're going to buy mortgage-backed securities. The whole market's helping mortgage-backed securities tremendously. So let's dig into this, and I'll show you where the news is coming from and what's happening. So right now we see, and this is today's day, is the Dow at this point is down 725 points. Rush to safety drags U.S. Treasury yields to 5-month lows. They don't talk about mortgage-backed securities because most people don't even know what a mortgage-backed security is. So let's see what that did for us today. Holy shnikes, okay? This is the number that people follow me on a daily basis to figure out what's going on with this and why. This is the mortgage-backed security price. Again, guys, what did I just say? As the price goes up, yields or mortgage rates are coming down. So we love green. So let's see what's happening, and then we're going to go over the news for the week on what should happen or continue throughout the rest of this week. So we look at this, and this is the last quarter. So back in May, April and May, we saw a nice little run up. Again, as this runs up, rates are coming down. As this goes down, rates are going up. Right here is when the Fed met in May, and there was concerns over inflation. So it plummeted the markets because of inflation fears, and then we rallied back. And then what happened back in June, same thing happened. We plummeted, but then we came back, and we kept coming back, and we keep coming back. Now there's news about new COVID variations and all kind of other stuff, and the mainstream media and whatever else. I'm not even going to get into that, but it's helping us huge. So that's where we are right now. So let's look at some tendencies or some trends that should take effect and what I predict for the next week or so. Okay, so let's refresh this so I can get you a new screen. And let's go over some technicals. So now the technicals are saying, okay, we're actually in I won't say uncharted territories, but we exceeded where we should be at this time. Here's what I mean. These are technicals that I follow on a daily basis to figure out where's the market trends going. So these lines are what we call Fibonacci levels. Okay, they're these two right here are ceilings, and this is the floor. Okay, so when you're charting anything, it could be weather, stock prices, baseball scores, whatever, it usually fits in a range. Okay, this range right here is set in place by tops and bottoms. Okay, these are called Fibonacci levels. Okay, this should create a temporary ceiling for us and floor. Okay, we've been trading in that, which is, look at it, for months we've been trading within that with a couple little blips here and there. Okay, so then we also have other lines through here, and these are called moving averages. We have a 100-day, 50-day, and 25-day moving average. The other day I said we should be trading in this range. All right, but I said I'm looking at us to hit a 103.8 handle. Let's see where we're at. 103.89. Go back and watch any video that I've done in the last week, 2 or 3, and you're gonna hear me mention the 103.8 handle, and that's where we hit today. I'm hoping we close above that, because what will happen is this will create the new floor. Okay. However, this is a pretty robust number. We've had a nice little run in the last 2 or 3 or 4 days. You got to remember, this is also an investment. So you might have people starting to sell that got into this market way down here, and they're going to start taking profits. They're going to start selling their bonds. Maybe. We don't know what's going on with the stock market, because if there's nowhere else to put your money, you're just going to stay in the mortgage-backed securities market. So that's that part of it. So I'm expecting us to trade right in the 103.8 range and stay there for a while, unless something really hiccups the system. So let's look at the calendar for the week. This did nothing for us today. The China interest rates aren't going to do anything. Housing starts, building permits, this isn't going to affect anything. We know the housing market's hot. Okay, it is what it is. And I'll have another video going over other reasons why the housing market is hot, even because of other parameters. And it's not only just low rates. 20-year bond auction is Wednesday, nothing else. And then Thursday, we start getting job numbers and some other things. Nothing this week should really hiccup the markets. So if this trend stays, we should have a nice little, stay in this range. Okay, so that's good. Should we keep going up? I don't think so, because if we go back in time, we're basically almost at our best levels we've been in months. Okay. And there shouldn't really be much more news that comes out to push rates down even further. All right, so that's where I'm looking at there. So now what did the numbers do today? So we came out of the gate, and you can see we just spiked because everybody knew the market was just crashing. And then we ran up to 103.9. We stagnated and we eased back a little bit, and we're at 103.86 right now. This updated even a little bit more. So that's where we are. So my short-term prediction is we're going to stay right about the 103.8 handle right here, and we should be start trading in a range of 103.4 to 104. I know it's a huge gap, but I'm still saying we should be trading in the 103.8 handle right here and stay there for the next few weeks until more economic data comes out or the next Fed meeting. So let's get on to where mortgage rates are today. The unfortunate thing is today they haven't posted yet because of the volatility in the market. So the data that's presented by Black Knight is from Friday, but you can see where those are, and I'll post as soon as I get tomorrow's numbers. I will post those again. I post every day. But what Black Knight does is they survey mortgage lenders all over the country, and we send in what our rates are, and this is where we show them today, or Black Knight shows them today. These are not my rates. I post my rates a couple times a week just to show you where I'm in tune to these numbers. I'm usually right at these numbers or a little bit lower. Okay, so that's what it tells you. If you have a rate that is extremely lower than these or extremely higher, please let me know, because you're either one, you're getting duped, two, you're paying too much money, or three, you're getting duped. Okay, so that's the explanation behind that. But the 30-year conforming jumbo FHA and VA are this: 3.08, 3.09, 3.16, and 2.68. Okay, the one-day delta, what this is basically a one-day change. 7-day delta means change, so a 7-day change and a 1-month change. We're only 1 basis points off from where we were last Friday. 1 basis points equates out to 0.01. Okay, so it's not a big move. You can go over to here and start seeing within the past month, we're down about an 1/8 across the board, and you're going to see probably another pickup of another 1/8 tomorrow, or close to that. Look at the nice little trend we have right now of going down. So if you spoke with me in the last couple of days, I warned you or stated up front, I am not locking you in. I'm waiting for a bottom, because here's my analogy behind this. If your stock price, you're looking at a stock and it keeps dropping and dropping and dropping, why would you buy it and watch it continue to drop? What you want to see is it to bottom and actually create a bottom. And there's technicals that we watch to see that. Once we hit that, I'll lock you in. That's where the one big difference that we are than most lenders out there, almost all lenders out there. You put in the application, they'll tell you what the rate is, they'll lock your, say you want to lock or float, and then they kind of leave the ball in your hands. I do all the work for you. This is the biggest piece of our puzzle that we do for you. We have the programs, we have all the other stuff. We underwrite in-house, we're a lender, we have everything else, but the one thing we are diligent on is making sure you're in the right program and locked at the right time. So if you'd like to find out more about me and my team, the best way to do that is go to our website, and we just launched a brand new website with a bunch of bells and whistles just last week. You go to therateupdate.com, and there's multiple ways to get a hold of us. You can see our reviews and everything down through here and all kind of different things about us. But if you want to reach out to us, people do one of two things, or actually three things. You can apply right now. You can click it, you can do it by your mobile or your desktop, and you can basically follow your loan from the application to all the keys in your pocket or the check in your hand if you're looking to refinance. If you want to talk to somebody, give us a call at 844-775-LOAN, 844-775-5626. What a lot of people are doing right now is they're scheduling an appointment. Let's say you're watching me at night and you're like, hey, I really like to talk to somebody. You can schedule a 15, 30, or 60-minute consultation. You just click the schedule a meeting. It'll pop this up. You pick the time that you'd like. Let's say I want a 15-minute consultation. It'll give you the times and days that we have available for you. You click it. You'll get an alert that we can do this by Zoom or phone call. You choose. It'll give me that data, and then I'll be talking to you on that date at that time. Other than that, I want to thank you for watching. Please don't forget to give us a thumbs up. Subscribe down below. Click the bell every time we post a video. You get an alert. God bless, guys. Thanks for watching. Hope to hear from you soon. I'll talk to you tomorrow. Bye-bye.